Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all those confusing corporate filings and sometimes uncover a hidden gem, or oh boy, a hidden disaster. Today we're diving into a financial filing that details millions from Golub Capital BDC incorporated about their recent bond offering. Get ready, because we're going to decode what this means for investors and the company. Alright, so the big news here is about what are called notes. These are basically loans that the company is taking out from investors. Golub Capital BDC is offering up a bunch of these notes that are due in 2028. The main point of this filing is to give you all the super detailed information you need if you are thinking about buying these. Think of it like a very official and long explanation before you sign on the dotted line. And honestly, this kind of detailed disclosure means they're trying to be super transparent with potential buyers. Now let's talk about what these notes actually mean for the company and for the people buying them. The filing explains that these notes are unsecured. That is a big deal. It means these notes are not backed by any specific assets of the company. In simpler terms, if the company runs into serious financial trouble and can't pay back the money, these note holders will be somewhere in line to get their money back. But they don't have a first claim on any particular piece of property or asset like they would if the loan was secured. It also mentions they rank equally with other existing and future unsecured debt, basically meaning they are all in the same boat in the pecking order if things go south. Let's look at the numbers. As of the 18th of September 2025, Golub Capital BDC Incorporated had a massive $4.9 billion of debt already on its books. That is a lot of money. They break it down though, about $2.2 billion of that was unsecured debt, like these notes, which means it ranks equally with the new notes. Then there is about $1.4 billion that is structurally senior, which means it is tied to assets of their subsidiaries, and then another $1.3 billion secured by their own assets. This is important because it tells you how much other debt the company has that could affect where these new note holders stand if things get tough. It is like knowing how many people are ahead of you in line. Now, of course, with any investment, especially in debt like this, there are risks. The filing is very clear about these risks. They're not shy about telling you that investing in their securities involves a high degree of risk. We're talking about potential leverage, meaning they use borrowed money to invest, which can magnify both gains and losses. Plus, their investments are primarily in companies that might be rated below investment grade, or what some folks call junk bonds. These companies have more speculative characteristics, meaning there is a higher chance they might not be able to pay back their debts or interest. Let us quickly peek at some financial highlights. Back in June of 2025, their net asset value per S-share was around $15.19. That is a measure of what each share is truly worth based on the company S assets and liabilities. Fast forward to the end of that same period, in September, the market value per S-share they reported was closer to $14.65. That indicates the market thought the shares were worth less than their underlying assets. This difference is not uncommon for business development companies, but it's worth noting for investors. A drop from 15.19 to 14.65 is a noticeable shift, showing market sentiment. So what is the plan with all this money they're hoping to raise from selling these notes? Well, the filing states they intend to use the proceeds mainly to pay back some of the debt they owe under something called the JP Morgan Chase Credit Facility. This is a standard move for companies looking to manage their debt load, potentially reducing interest payments or gaining more financial flexibility. It is like refinancing your own loans to get a better deal. However, they also mention they might reborrow under that facility or use another line of credit for general corporate purposes, which could include making new investments. Now we're getting into the nitty-gritty of the deal itself. The documents laying out the terms for these notes reveal that the indenture or the contract for these notes has limited protections for the people holding them. This means there are not many restrictions on what the company can and cannot do regarding issuing more debt, selling assets, or engaging in other financial moves. They specifically point out that the indenture doesn't restrict them from issuing more debt, even if it ranks equally or is secured. This is a crucial point for anyone considering these notes. It emphasizes the unsecured nature and the relative junior position compared to any secured debt. To sum up, this offering of notes is essentially a way for Golub Capital BDC Incorporated to get more funds to manage its existing debt. While the company is financially stable and has a significant amount of debt, it is important for investors to understand the unsecured nature of these notes and their position relative to other creditors. They are getting money from investors that they will then use to pay down other debts. This is a common financial strategy, but it's not without its own set of risks, especially if the company's financial health were to decline significantly. The key takeaway here is that while this offers a way for the company to manage its finances, it is crucial for investors to be aware of the limited protections and prioritize due diligence before investing. That is our decode of this Golub Capital BDC filing. What are your thoughts on these notes and the company's debt strategy? Let me know in the comments below. If you found this breakdown helpful, please hit that like button. It really makes a difference, and make sure you are subscribed so you don't miss our next corporate deep dive. And hey, if you want to connect with other finance enthusiasts and get even more exclusive content, check out our Discord community linked in the description below. Thanks for tuning in, and we'll see you on the next episode of Corporate Decoder.